So Tim, we're here because the availability for the coronavirus business interruption loan scheme is possibly ending at the end of the month.
Yeah, that's right. The current deadline is the 30th of September for lenders to receive an application. They will then have another 2 months to approve an offer. We're not currently aware of any extension to that deadline, so we wouldn't be advising people to rely on an extension. And lenders are already seeing an increase in volumes of applications as the deadline draws near. So if you do think CBILS is an option for you, then you need to act quickly.
So the business interruption loan scheme is only one of a number of lending initiatives to support businesses through the coronavirus. It's had a huge uptake. £13.5 billion has been lent, and that's with only 49% of approval. It's a 49% of approval rate. Now, that's from the government website statistics up until the 16th of August. And the interesting thing for us is that there's still 1,000 applications in the 7 days prior to that. So it still shows that cash is needed by businesses out there. Now, we're 6 months into the pandemic. Business owners should have a bit more of an idea of, first of all, the impact of coronavirus, but also of the landscape that they're going to trade through for the next 6 to 12 months. So, Tim, we're suggesting now that business owners are forecasting possibly 12 to 24 months in advance.
Yeah, that's right. Actually, as a result of government support, some businesses will find they're in a more positive cash position than they would be usually. But that government support is going to be withdrawn, such as the furlough scheme or sector-specific initiatives like Eat Out to Help Out. So that needs to be understood. Businesses should, as you say, have a better understanding of post-COVID revenue, so they can roll that forecast forward on a more informed basis. But in addition to that, they may now be facing exceptional costs, such as redundancies, or they might have seasonal cash flow to deal with, for example, as leisure industry goes into typically low season. But also, many businesses will have higher debt loads following tax deferrals and payment plans with suppliers or payment holidays. So having detailed visibility on what that position looks like in cash terms over the next 12 to 24 months will be really important for businesses to identify problems ahead of time. If businesses are forecasting cash flow stress, CBILS is still an option, and it may well be suitable because the commercial terms in terms of cost and security are likely to be more favourable than normal lending at the current time.
So at the start of the pandemic, there was just over 40 lenders accredited to lend by the British Business Bank. That's now well over 100, so there's a lot more availability out there. Lenders have also got a better understanding of the trading environment, and it's some of them are now opening up to look at new businesses as well, so you don't have to stick with your current provider. It's really important that this isn't just used as a rescue package throughout the pandemic. CBILS can be used to invest in your business, and that could be through investment or growth plans, which is a positive and one to remember.
Yeah, and a couple more refreshers on CBILS. So you have to demonstrate that you have suffered an adverse impact to your business as a result of COVID, which, for the most people, it's easily identifiable with a dip in their revenue. You have to demonstrate that your business was viable pre-COVID and that any loan that you are asking for is affordable, and that is done with historic financial information and financial forecasts. Another point that people might not be aware of is that it is possible to refinance or repay a bounce back loan with a CBILS loan. So if you think your funding requirement has increased, that could still be an option. And in terms of amount lend, it's 50k to £5 million, but also it's 25% of turnover or twice your wage bill for your last year. So something to bear in mind when you're looking at your funding requirements to consider whether CBILS will give you the funding that you need.
So we think there's three key considerations. First of all, act now. It's open until the 30th of September. it's worthwhile acting now because could be more difficult to gain funding in 6 months' time and not on such good terms as the CBILS will allow, both in cost and terms of availability. And also, don't just make do. This can be, the facility can be used to help you diversify, invest or expand your business.
Absolutely, and just to remind people that even though it's late in the day in terms of the CBILS scheme, that shouldn't deter an application if the funding is required. As you've noted, there are an increase in lenders out there offering a range of products. One thing I would say is where we've had good success with clients that have applied for CBILS, where we've assisted, is where we've helped them independently quantify their forecasts and funding requirements and help them review and prepare their applications prior to submission for lenders. So we know that businesses that do apply for CBILS are 4 times more likely to be approved if they have received professional advice on their applications. And happily, that's enabled us to help clients move from rejection to acceptance.